morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Monday. I hope it finds you well out there. I hope you had a great weekend. Tough luck for the Broncos. I mean, they hung around for a few minutes, but the Bills winning you got it all. You got the college football, you got the pro football, the playoffs, right? We got leading up to the Phoenix Open, and the holiday season will officially be over after the Super Bowl. But the matchup that the TV wanted next week, Lamar Jackson and Josh Allen, that should be much watched TV. Speaking of watching TV, LA still burning. It doesn't appear that it's going to end anytime soon. The damage continuing to get worse. The winds are back. We'll see how much more of it. Hopefully, the worst of it is beyond. Unfortunately, it's going to be a big one, right? There's no other way you can say it. My guess is we're going to see, due to the amount of damage out there, there's going to need a bailout is going to be needed, most likely in the I guess the emergency assurance industry, like State Farm and Allstate. They didn't have a ton of exposure. Because they were smart. We're like, hey, you guys aren't really taking care of business, right? You're not going to cut stuff and control burn and actually prepare. Well, then we're just not going to insure anything. Then they have the state. Florida knows this with the hurricanes too, right? The state fund. It's a neat little thing. They will give you the insurance. Of course, it's expensive and all that stuff. But if they end up not having enough money to cover all the people that got that insurance, which it appears that is going to be the case, apparently they just go to the insurance companies and send them the extra bill. And it's based upon the amount of coverage you have in the state. So even though Allstate and State Farm and them, hey, they really got out of that area, they're still going to have to pay more than what they should. But we talked about it last week. Mercury, that's the one I think that's going to be in trouble. We'll see. Let's hope, let's just hope things stop burning there in California. Our toll-free number, 800-951-0592. The website at allamericangold.com. And it's going to be a very busy week. Lots of data going to be out this week. We're going to get CPI, PPI, so that's your inflation. Right, we're going to get that. We're going to get retail sales. Okay, how was the holidays? So far, if today's any indication, it's not a good start. Not a good start, as we've heard from the likes of like Lululemon, Abercrombie and Fitch, right? These guys were the good ones, right? They were the good ones coming into the holiday season, and Wall Street did not like that. They essentially had low expectations. Those retailers didn't give bad guidance. They're just like, it was okay. And then, of course, Macy's, Kohl's, right? They've already announced that they're shutting all kinds of more stores. So we will get a lot of data. We're also going to get first quarter earnings, so that's going to start. And then all kinds of Fed speakers, Jason. So there's going to be a lot of stuff flying out this week. And of course, the last few weeks been pretty quiet. It's going to be action-packed. And then as a going away, I don't know if people caught this, because last week I was like, man, what is going on with oil? Why is it going up? Right now, oil should be the cheapest. See, it's kind of funny how oil works. In the winter, the fall winter, it's cold. People don't like to leave the house. We just drive less. And you're supposed to refill all the tanks, right? Get the gas refilled, get the oil stocks refilled. Well, we are doing okay on the gas, but the oil stocks, there's no oil. Well, there's plenty of oil. There's just no oil in storage. This morning, I guess yesterday, the Biden administration, as a going-away president, Jason, they announced a bunch more sanctions on Russian oil. Now it's got oil's almost back up to $80 a gallon. I was waiting. We're supposed to get, gas here in Arizona. We're supposed to get into the twos. That's out the window. I don't know if Trump's going to reverse it or not. Probably not. But, yeah, here you go. By the way, now we're going to finally do something, and you can deal with it.
$80 a barrel? You said $80 a gallon. Oh, that wouldn't be.
$80 a barrel. Yeah, $80 a gallon. We're not there yet.
If inflation keeps going, maybe we'll get there. What would a barrel be if a gallon was 80? But why do I get the feeling if somewhere near the end of our lives we may actually see something like that, Joe? Why do I get the feeling? Yeah, hey, hyperinflation will get you there, right?
Yeah. You need to stop having these feelings. That's what I've decided. Patriot Radio News Hour. Joe and Jason, we'll be right back. 800-951-0592. Joe and Jason here on this Monday. Yeah, kind of like fighting a little crud here. I can't tell, right? Don't you hate that? You're like, uh-oh. Am I getting sick? Am I not sick? Right? I'm right in between. Maybe it's just because it's Monday, right? That's what I'm hoping, right? It's just, I'm just bummed out because, it's Monday, had to go back to work day. But I'll say what, this will be a very interesting week here. I think they're kind of gearing up for bad news. And what do I mean by bad news? I think inflation, right? We're going to get more of the same, where back to creeping in the wrong direction. Of course, all these other, like these sanctions now with oil in Russia, going to make it really hard on China and India. That's just going to add to it. That won't be even reflected in the number that we're going to get this week. But nonetheless, I think we're going to see that. Plus, I think the holiday, I think it's going to be okay. Right? Nothing great. All the stores that were struggling, and we know who they are, right? They're all going to continue struggling. Right? The ones that were doing okay, they're going to be okay. That's kind of what I think. I think the banks, they're going to tell you things look great. Well, man, maybe Bank of America may struggle a little more than the other. That's what I think. Because they're allowed to play all these little tricks. But I think what you're going to see from these banks, things are okay, but we're worried about what's coming. And then, of course, all the Fed speakers that we're going to get this week, I think all of them, Jason, they're probably all going to sing the same tune, which is inflation, we're worried, we're going to take a pause. Some of them are going to say, hey, I don't think we're going to cut it all. A lot of them will, back to the old, well, we're going to have to wait for the data type stuff. I think that's what we can expect this week.
Well, let's see what happens. We've been talking about this for several weeks as we get further and further into 2025. So, Joanna, what do you see? How about this? What do you see as the next moves? What is going to be happening from where you're sitting?
Oh, I got to turn my mic on. We're not going to get a rate cut in January. I don't think we're going to get. Now, I don't think we're going to get a rate cut. Maybe for 2 meetings. Here's the thing. I still think we're going to get rate cuts. That's just where I'm at. Even though they're going to have a big decision to make, which is, are we going to do anything with inflation, or are we going to try to protect the bond markets and the banks? And I think that's what they're going to do.
Joe is usually better at predicting this than me because Joe's better at the conventional numbers, the over-the-line numbers, and just doing what they say they're going to do. I think once or twice, Joe, I think I actually outguessed you, but normally Joe's got this right. I think they're going to cut again. That's just me. I think they're going to keep on cutting until they decide to stop. But Joe's probably right. I'm guessing you're probably right, Joe, on this. You have their you have your finger up in the wind, so to speak, to figure it out. But Joe, I think they want to cut the rates a few more times. I think they want inflation, and they need a huge inflationary situation so they can reverse course and start raising rates. That's what I think, Joe. I think they want inflation back so they have an excuse.
Yeah, quick look then. So right now, the Dow is up for now. We'll see where it finishes. Up 130 points. The S&P's down 34, kind of breaking down here. The NASDAQ is down 263. And here's that bond market, 481. Here we go. And again, I think these are going to be, we're going to be talking about bond yields going back to 2008, 2007. These types of numbers, regardless of what the Fed is going to do. Oil's up almost $2.50 now, $79 on NYMEX. Brent, 81.5. Natural gas is higher, right? And of course, we got the big cold streak. Unleaded gas higher as well. Profit taking on gold. I think listen, you're going to get a good opportunity, I think, this week with gold and silver. I don't know how long it'll last. Just because I think what we're going to get, hotter inflation, higher rates, and the Fed people saying we're going to take a pause here. We'll see how long it goes. I don't think very long, and I think we're at that point now where the higher the rates go, you're probably going to see gold going higher because rates aren't going up for a good reason, right? Rates are supposed to go up because, hey, the economy's really strong, things are really good, we don't want it to overheat. That's not where we're at. I think they're all kind of realizing, all these central banks want to cut rates, but rates keep going the other direction. And I think the issue is what we saw with the jobs number last week. Is the jobs number, is it just bad data? I don't know. Remember, we got that red hot jobs number that really kind of confused a lot of people out there. I'm not so worried about it, but I will say the one thing that I am worried about, bankruptcy filings from corporations. Jason, we're back to 2008. So think about 08 and how bad it was in 08. We have just as many companies now filing for bankruptcy as we did back then, Jason. I think this is economy of the haves, and then all the have-nots are dying.
Yeah, that's going to get worse, Joe. I mean, we talked about it a lot last week, and with what's going on, it just seems like life's going to get expensive, isn't it, Joe? Life is going to get really expensive, isn't it? With what we're seeing unraveling the last month, essentially, plus especially recently, Joe. And plus the nominees. We're going to see a lot of nominees of this week. I think this is, let's not forget, we're going to have, I think, 13 potential cabinet members. How big of a struggle will it be to get these approved? And then the debt ceiling. So that's going to be the other thing. Hitting the debt ceiling
is going to be another thing that we're going to have to look out for. And if we start seeing issues in the appointments, that'll tell you that it's going to be a struggle on the debt ceiling as well. So those are, Jason, there's a lot of stuff happening this week. And I think for me, once again, I'm going to be focused on this bond market. Yields everywhere heading higher and higher. Think about Japan. We don't really, we talk about their currency. Their 10-year notes at 1.2%. I mean, that sounds like nothing. But you got to remember, Japan's used to having negative bond rates. You look at France, England now. England warning again. We're talking about almost parity on these currencies. The euro, it's only at $1.02. I think we're going to see parity with the dollar, and I think the euro could break below $1, Jason. Because I think what's affecting us affects Europe first. That's just what I think. I think France is in big trouble. England's in big trouble. Germany is in big trouble. I mean, this thing we are shaping up for a debt crisis. I think that's really kind of the theme maybe for 2025 is going to be, where does the debt crisis start? What bond market buckles first?
Japan, maybe. What about Japan? Does this seem like that's like an explosion just waiting to happen? Just an explosion waiting to happen. They've been so upside down for so long. All it takes is one bad event there. And China's not doing good because nobody's buying stuff in America. So how is China going to keep their economy roaring and doing so great when people aren't buying their stuff? It's definitely a volcano getting ready to erupt. It's all it is you're living on the island. It's just a matter of when, right?
Yeah, right. It's a matter of which one is going to do it first. We'll see. I think, like I said, it's a pretty easy thing for me and I've been saying this a while now. Rates will go as high as they need to bring the bubble to its knees, because that's really what it is. You got to understand why do they lower rates? Why did they leave rates at 0 for 15 years? Because they're trying to get you to spend before you really wanted to. In other words, hey, if we get rates cheap enough, look at what they did to housing. Oh, by the way, that's another. I will say this: the thing that's going on in California is going to be really, really bad for inflation. And people say, well, it's just California. Yeah. But you got to remember, California all by itself, it's like a top 5 economy. I mean, it's a big deal. And already rents are going up, right? People, they got a house for rent. Yeah, it just got more expensive. Right? I mean, right, Jason? It just did. And then you got to remember, a lot of this stuff's got to get rebuilt, right? They're going to rebuild a lot of it. I mean, that's, again, more things here. I think we're going to see people, they're starting to wake up a little bit, Jason. But I hate to say it, I don't think people really thought that the 10-year note was going to be above 5%. I don't think people are really prepared. We could easily see 6. I mean, remember, Jamie Dimon's been still saying, don't be shocked at 8. That by itself, that would be unmanageable. That just would destroy everything. And then, of course, you talk about the bankruptcies, Chapter 7, Chapter 11, Chapter 13. It doesn't matter. All of them now back to the financial crisis levels.
Well, and it seems like things have been put in a position where, like housing prices in Colorado are starting to come down, Joe. But look at how many rate rises if you're going to buy a mortgage. They're starting to climb, right? There's been several of them in the last few weeks where it's getting more and more. You're past 7% now in Colorado, and I think across the country, really.
Yeah, 7.25 in a lot of places now.
What I get the feeling is the houses start to lose value, the rates will continue to go up, and it'll cost the same to get a house. It may be cheaper to get the house, but the rates are going to replace all of that savings in the payment. I think the same thing is going to happen. So I think things that are real things, commodities, Joe, this might be what we're getting ready to see where, yeah, the prices of things might go down when the stock market goes down, but the premium or the interest rate or whatever is going to keep the price the same. So let's say gold were to drop $100 or $200. Well, I get the feeling the premiums are just going to hold right there. Look at housing prices starting to slip down. I'm just doing Colorado. I'm sure if you look in your neck of the woods, if you're outside of Arizona or Colorado, interest rates go up with the price going down. Your payment's the same. Unless you can buy a house outright, it doesn't help you. Who's it going to help when the housing prices go down and the rates go up? It's going to help the banks and the big private buyers, right, Joe? Private buyer loves a house goes down $50,000. They're not going to have a mortgage, right? All that wealth going up, Joe.
Get ready. Get ready to dig in here. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason. Some breaking news here. Let's see. Hold on. President Biden announcing more of these student loan forgiveness stuff. So, again, all of this stuff goes right to the debt, the ones that get passed. He's trying to forgive more than $180 billion of student loan debt. Didn't quite get it done, but, yeah, kind of the last final days of the Biden administration spending as much as it possibly can. And again, I think it's going to stop. I think the Trump administration, they want to spend it different, right? I mean, that's really kind of the difference here, but spending nonetheless, it's going to be a very interesting next 60 days because there's a lot going on. Right, we're going to get the inflation data. We're going to hear about Christmas, right? All that stuff. We're going to see a lot of retail closures, and we do normally this time of year anyway. Obviously, this year will be on the higher side, and then we're going to have the emergency measures. Right, you got to have the Trump inauguration. How will the appointments go? I'll look at it this way. This is kind of how I'll view it. If we start having trouble, and we know there's a handful that are a little controversial, right? There's a handful. But even the ones that really probably aren't, if they struggle to get through the process, don't be surprised if we don't get one of the big three rating agencies downgrade the U.S. again. Because I think that would be an indication that the debt ceiling, Jason, will be a problem. And, of course, you got to remember, right, we've got continuing resolutions, right? There is no budget. There's a lot of things that got to happen in the next 60 days.
There's a lot. Yeah, that whatever the government decides to spend, right, Joe? What are they going? Well, I'm hearing all the murmurs. They gotta spend a bunch of money on California now. It's just spend more money, right? Got to spend, right? And why do we get the feeling that California is going to get a certain amount of money, and it's not all going to go to California, right? Hey, it's such a bad emergency. We need to give them X billions of dollars, and maybe only half of it gets there, right, Joe? Because there's a lot of holes in the dam to fill, isn't there? It's not just California.
What are we talking about here? I mean, the insurance system sure looks like it's broken, doesn't it?
Yep.
Right? What's going to happen in Florida? We've been talking about all of the places there. Florida's got the same type of system that California does. where the state has stepped in. And of course, here's the problem. If nothing really bad happens, then it's okay, right? Then it's okay. But the second, something bad happens, it's not okay. And I think we're going to see this in Florida, in California, right? What about, let's not count out Louisiana, Texas, these other places that are susceptible to these types of things. But are we going to end up where, kind of like healthcare, could we go to that in the insurance industry where you got to go to the government insurance corporation? I don't know that. I'm worried because it seems like all of the insurers want to get out of anywhere where there's actual risk. It seems like they don't want to be, right? Anywhere where there's actual risk, it seems like they don't want to be there. I mean, very rarely does a house burn down once in a blue moon, right? And usually it's contained to what? That house, right? Maybe that house and the one next one got a little damage, but that's it. Anywhere where there's real risk, it doesn't look like they want to be. And I just think about how much more expensive my health care got once the government took over, right? Obamacare for me has been the worst thing ever. Horrible. Couldn't be worse. Are we going to get the same thing in the insurance industry? I wouldn't be surprised, Jason. I would not be surprised one bit because I think it's at the point now, especially with inflation, it's just not affordable. When we look at where the homes in California burnt down, the average home or the median home, right? This would be, you don't live in a great neighborhood, right? But this is a solid working class neighborhood, okay? 1.4 million.
Oh, man.
Right? That was just, hey, you're not poor, but yeah, you're not rich, right? You're a working class schlub in California. That was the price of the average price of these homes in California. Then of course you had the million, $3, $4, $5 million homes burning down, right? But I mean,
it's more than that. It's even more than that.
It's a lot.
I heard Adam Carolla talking on a show, and he has a house in Malibu. He doesn't know if from what I saw, he didn't know if his house had burned. He thought maybe his might have survived. He said the low-end houses where he lives in Malibu, and they almost all of them burned down. $12 million for the low end, with $75 million homes were the high end. That adds up pretty quick. You're talking 1.4 million. One of those low-end Malibu homes is like almost 10 of those, right? And then then there's the 20, 30, 40, 50, 60, 75 million dollar homes. I mean, so there's. I'm guessing those people had pretty good insurance. I'm pretty sure those people probably had the kind of money to stage a fight against the insurance companies. It sounds like a bailout, doesn't it? This sounds like in March we're going to have some sort of a bailout here, doesn't it, Joe? That's what it's starting to look like. Those are big numbers. I heard $150 to $250 billion is what they're estimating the damage right now, and it hasn't stopped yet.
And that's not insured. Okay, so when we see that, it's not insured, that amount of damage. But the question is, how much of it is? Right? And the problem is that number's getting bigger and bigger, and you're sitting there thinking about, okay, wait a minute. Gosh, what if it's 30, 40, heaven forbid, I hope it doesn't get this high, $50 billion in insured losses. Now we've got a problem, right? $10 billion they could have handled. $20 billion, okay, there's probably going to be some failures. You get into that $30, $40 billion, $50 billion. Okay, now we've got a full-blown big problem. Patriot Radio News Hour. We'll be back after the break. 100-951-0592 Today's special, $20 gold. So gold's down 20. $20 gold down 20. 12 or 27.75 on a $20 gold piece. You got spot gold here, what, 27.67, 27.68. So you're what, about $100 over a $20 gold piece today. And then U.S. Silver Eagles, $720. I mean, I want to say, what was it, Friday? We were like $755, something like that on rolls of U.S. Silver Eagles. Take advantage today. That's a great opportunity on U.S. Silver Eagles. Rolls of U.S. Silver Eagles, $720. $20 gold pieces, $2,775 at 800-951-0592. And over the weekend, Mexico's new president, she's calling for, this is something she campaigned on, nationalizing the mining industry in Mexico. And she was out with this plan, Jason, over the weekend, claiming that Mexico is going to reclaim its natural resources for the people. And again, this has been a rallying cry inside of Mexico, right? This is, we've seen this before, where countries essentially decide, hey, we don't like the deal, right? You guys, especially, you look at it, right? Hey, it was one thing when silver was $4 or $5, and you had the big mining companies coming in, and now, you got $30 silver, and Mexico's like, wait a minute. We want more. We want a bigger piece of the pie here. We don't like these deals. And Jason, what usually ends up happening in these situations, production goes down. Right? I mean, that's just what happens. Why does production go down? Well, because the guys that actually know what they're doing leave. Right? Because Mexico says, get out. Right? Hey, we want to run our own companies. And it's great when it's a standard, okay, everything's great, blow this up, blast this, get the truck, get the backhoes, run it through the feeders, put it into a bar, ship it. It works fine then. But the second something unusual happens, that's when the problems come up. And the guys that would have the expertise, they work for the big corporate mining companies that Mexico's looking to throw out. I think this is another one of these things, Jason, that is extremely bullish for the silver markets, is Mexico essentially trying to take over not only their mines, because silver, Mexico's the largest silver producer. They're already struggling, right? Production's been going down anyway there. I think this is a game changer. I think this is really going to end badly. Well, I shouldn't say badly. It's just going to mean less silver comes out of the ground, period.
Yeah, you keep hearing all these stories of shortages and short supplies and not enough. And, 2024 shows that, the price of silver went up very well. Are we going to have 2025 do the same? Do these shortages actually exist? Are these contracts going to move the price? And I've got several things I wanted to watch and learn about silver. I didn't get to this weekend, but I'll look at it, Joe, because everyone's screaming silver's going to go up. There's not enough. There's not enough. And it's just been sort of hanging out, right? It's been hanging out. And then what is that? Was it 31? 31's the level, and then 35. 31 and 35.
Can't get there, right? Right? So we tried 31 again last week. Right now you got gold, silver $29.60. Jump on it. Because remember, I've been screaming about 31. We get above 31, look out. It'll go right to 32, and then anything over 32, it's going to 35. anytime you see silver below 30, start buying it. And guess what? I put it on sale today for that reason. You can buy Silver Eagles today, $720 at 800-951-0592. I'll say this, like Jason said, it's hard to know. But here's some facts we do know. China's silver demand doubled. It doubled. And it's doubled like in the last 3 years. Like this year was up 50%. We know that especially with the electric car, solar, all this stuff, all the green stuff, it's there. Listen, we're not going backwards, right? The electric car is here and it's coming. When we look at production from the largest producers in the world, there's problems. Well, what's the problem? Well, got these big pits. Eventually, it gets harder to get, right? Right? The amount of silver in every ton of dirt gets a little less, and a little less, and a little less, and there's just not enough new ones to be out there. And I think listen, anyone, what was silver in 2021? Like $18? Right? I mean, it's made a nice move here. But to Jason's point, is there going to be a crisis in the silver market that pushes it to 50 in a matter of weeks? That's the thing we don't know. A lot of people think so, but we'll have to wait and see. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason wrapping up this Monday. It's going to be a busy, busy week. $20 gold, $27.75. Rolls of U.S. Silver Eagles. Way down here, $7.20. Here's the other thing we know about silver. This is the third straight year of supply deficit. And 2025, from what I'm seeing, will be the fourth straight year of deficit. And what we're seeing, kind of this pattern, Jason, is, okay, the first year of deficit, didn't really do much, right? Because there was a lot of surplus above ground. Year two, silver went up a little bit, went up 10%. Year three, last year, what was silver up last year? 30%? Something like that? Right? Now we're talking year four. Now, I think what everyone wants to see are these tariffs. And of course, I think the gold and silver markets react more than anybody else. I don't think they're going to matter. At least not. We don't get any cars from China. Who cares, right? I mean, that's where most of the silver is going. Plus power, right? You got to throw power. They need silver for power. Jason, I don't think it's going to matter. I think we're going to have another big year in silver. I do. I think this is going to be the fourth straight year of declines. I think there's problems in a lot of these countries where the silver's at. And the higher the silver goes, the more these countries are going to want. And unfortunately, the guys running the business are like, dude, it doesn't work that way. Right? Look at Mexico with the best miners in the world running these things. They're saying, hey, the mine cost in Mexico is over $28 an ounce. And guess what? If the oil price keeps going where it's going, might as well throw $28 an ounce and throw that right out the window. If Trump leaves these sanctions, and throw that right out the window. Jason, imagine what happens when you tell them to get out. Right? What happens to the cost, right? It's going to cost a whole lot more. I think silver's prime. That's where I'm at on it.
You had premiums added on to a raised price, because, Joe, there's going to be at some point some market decline, whether it be this year or even next year. Yeah. And if it doesn't even matter because a house or an ounce of gold just keeps going up because the premiums. Joe's talking about silver going up. If gold goes up too, and the premiums, which will return, go up with it, then you're talking exponentially more expensive metals. And you'll be saying, man, I should have got it at the end of 2024, the beginning of 2025. I should have jumped on that new level. Yeah, I know a lot of people complain that they didn't get in at the beginning of 2024 and it took off. It's going to keep doing it. Joe just talked about 4 years, right? 4 years in a row of silver. So if you're going to get it, you better start jumping on it.
Premium is the big thing. I've been doing this a long, long time. Over 20 years. I've never seen premiums this inexpensive in my lifetime. It just never happened. I mean, even when silver was like $4 and change, right? You were buying Silver Eagles at like 25% over spot. I mean, that was just where it was. I mean, that's just how it worked. These silver premiums, these gold premiums, these are premiums like once this is this generation's shot, right? Once in a generation, you get this, and we're in it right now. Take advantage of it. $20 gold, $27.75. Rolls of Silver Eagles, $720. Jason.